So today we're going to be talking about how to properly and correctly shop for a mortgage. And this video is going to have 4 different parts. First, why different real estate professionals, including mortgage professionals, discourage from their clients from shopping, how to shop correctly, why should you shop correctly, and what are some things that can go wrong in the process of shopping. So first, we'll address that first question. Why do real estate professionals discourage people from shopping? So from the realtor side of things, a lot of times it's not coming from any sort of malicious intent. It's just that realtors typically have people that they know and they trust and they've worked with for a while, and they have a very solid relationship. They know when they send a referral that they know that mortgage lender is going to be able to close and deliver what they promise. So that's really the first major reason when realtors send clients to their loan professionals that they choose. That's really the main motivation. Working with somebody you've never worked with before as a realtor can be sometimes a little bit stressful because you don't know what to expect. You don't know that you're going to get things that are required on time. So that's not really coming from any malicious intent, but that is something that is very common. A lot of times realtors are very enthusiastic about who they send their clients to, and they really, really push their clients to at least get pre-approved with one of their preferred lenders. On the mortgage lender side of things, a lot of people in our business don't want to encourage shopping because we don't get paid if we don't close your loan in our name. So those are really the 2 biggest things, and that's really why people are discouraged from shopping, because realtors don't want to work with somebody new that they don't really know what to expect, and mortgage lenders, they don't want to lose a business, so they're not going to tell you to go out and shop, which a lot of times is in your best interest to go out and shop for a mortgage, because you really might be missing out on a higher level of customer service, or you might be missing out on potential cost savings with your interest rate and closing costs. So next question, how do you shop correctly? So shopping needs to be done in a very specific way for you to be getting the best benefit out of it. And we're gonna go through 6 steps for you to go through in your shopping process. So the first step is to actually find the lenders that you are considering for your loan. So the best place to start is to ask your real estate agent for a referral. Some of them will only give you 1, some of them will give you a few. If they only give you 1, you can even ask for more because most realtors know a few different lenders. You could also ask people that you know if they can recommend somebody to you. So 3 is a good number to start with. If you are not finding any responsiveness or you're not really driving with one of them, then I would say keep looking, and then 3 is the magic number to have once you are further into the process. I would say once you're into contract, you should have 3 different lenders lined up who are ready to compete for your business. Step 2 is to get in touch with those lenders and go through their pre-approval or pre-qualification process. And I would do this all around the same time. So set aside a few, like maybe a day, and gather all of the paperwork that they request of you, get on the phone with each of those different lenders, and then that way you have already completed this process and you don't really have to worry too much about it after that. Also doing it around the same time is beneficial because it limits the impact on your credit report. So mortgage inquiries, like all inquiries, they count as the same within a shopping window, and that shopping window is 14 days. 2 of the credit bureaus allow you to go to 30 days, but the shortest is 14 days. So especially if you're somebody with credit that is kind of on the very edge of qualification, 14 days is what you should be looking for. Credit impacts are not very major at all for most people. So if you are out of that 14-day window, that's still fine. But if you are trying to be at certain credit score thresholds, or that's something that just you are worried about, then 14 days is what you're looking for. Step 3 is to weed out incompetent and unresponsive lenders. So there are plenty of mortgage professionals in this business, in this industry. If you are not getting your phone answered, if somebody isn't really giving you the level of customer service that you expect for one of the biggest transactions that you're ever going to do in your life, then you should not be working with them. I know plenty of other of my peers who are also highly competent with their customer service. And if you are not getting treated well, there's other loan officers, other mortgage brokers out there who are more than happy to help you, even if they know that you're going to shop them. Next is step 4. Once you have spoken with all of those lenders, you want to let them know that you are going to be shopping with them. So that kind of sets the tone for the transaction. As a mortgage professional, we know that we're dealing with somebody who is smart with their finances, and they are competent, and they are going to require a high level of customer service, but also pretty good pricing. So that is a good expectation to lay from the beginning. Step 5 is to get in contract on a home. So that is important because that starts ticking the clock for when different things need to be done. So on your contract, you're going to have a date that you have to meet loan application. You're going to have a date where you have to have your loan commitment back, which means you need to have your appraisal back before then, and you need to be underwritten. And you also have to meet your closing date. So a lot of us can work very fast, but it's important that you are ready with all of the lenders that you have chosen to shop, and you are able to get pricing from them all at the same time. So now that you're in contract, step 6 is to obtain loan estimates from each lender. And once you get all of those loan estimates, send them to each other and ask those loan officers or mortgage brokers to give you the best deal that they can offer. The loan estimate gives us as mortgage professionals all the information that we need to accurately compare the different loan that you're getting and give you the best deal that we possibly can. So that helps us to make sure that we understand how your loan is being structured by a competitor, maybe point out differences in the way that we plan to structure loans and compare the different options. Or maybe you really haven't come across clean with what your goals are for the purchase, and having that loan estimate from a competitor who is giving you something different that you may have not considered, that can help us open the door to how do you actually want this loan structured, and who can give you that loan at a better deal with the level of customer service that you require from the outset. So that is definitely important. One thing to also mention is that loan estimate is important because that is the only document that we can use as leverage to get better pricing. So a lot of times we can't really do anything if you are just getting a verbal estimate, or if you're getting like an email with a rate on it and points. That isn't very helpful. That doesn't allow us to compare the loan that you're getting apples to apples. And a lot of times, if you are not getting a loan estimate, you are actually not being offered those terms on that loan. So a loan estimate can show if the loan is locked, if it's not locked, if there's prepayment penalties, if you have an escrow account. There's lots of different information on there that you may not notice besides just the rate and the points and the closing costs. So having the loan estimate is important, and it also gives us leverage to ask for better pricing. Speed is also key. Mortgage bonds change literally all the time. So think of how the stock market goes up and down all the time, so do mortgage bonds. So pricing from one lender on Monday versus another on Tuesday, even if they have comparable pricing structures internally, and they would be offering you a very similar deal, it may be that just because of how the market is moved, one is off from the other. So getting that loan estimate from each of those lenders quickly is very important, especially right now. The mortgage market is very volatile right now, where we're seeing very big swings intraday, like within the day, and also between different days. So speed is key. Next, why should you shop correctly? So there's a few different reasons why you should be shopping correctly as opposed to incorrectly, and just shopping in general. So first, vetting multiple lenders helps you compare levels of customer service. So you should be looking for responsiveness, competency, transparency. How does that lender answer your questions? Do they get back to you in a timely manner? Are they honest and transparent with you? Those are all things that you should be looking for. And if you don't see it, then maybe you should be talking to another loan officer or another mortgage broker instead. Different lenders also often offer different levels of vetting for their pre-approval or different pre-qualification letters. A lot of people try to give as little documentation as possible up front, but that really is not in your best interest. Having a loan that is fully pre-approved and is ready to be submitted to underwriting from the point that you get into contract is really the best path, because if there's information that's missing, that information could be the difference between you qualifying or not, even if you don't really expect it to. So the more in-depth the pre-approval, the better. Sometimes we're even able to get underwritten pre-approvals, which is even more valuable, especially in a tight seller's market. Another question, what is your lender doing to strengthen your offer? So some people in our industry, they just give out the letter and that's it. And a lot of times that's fine, but if you really need help to get your offer accepted, especially in a multiple offer scenario, there are strategies that we as lenders can employ to help you get into contract on that home. So that's not necessarily things that fit in every circumstance, but if we're open and transparent and having that discussion of what you need help with and making sure that you're on board with strategies and your realtor is too, that can be very helpful. And not every lender offers that type of service, so having multiple lenders to choose from, that gives you the opportunity to find somebody who does, like my team, for example. Different lenders may have different perspectives on your scenario and offer different ideas on how to structure your loan. So that's a big one. Sometimes people are told that they qualify, and once they get through underwriting, they're not approved. Some people are told they don't qualify, and they actually do get approved. And in some cases, especially on fringe cases where you have very interesting and different types of loans, you may find different, very, very, very different loan structures and pricing for those unique scenarios. So it's always a good idea to talk to multiple lenders to make sure that you actually do qualify for the loan that you are trying to get, and also that your loan has the correct structure. And when you're talking to different lenders who have different structures for your loan, that may mean that you have more options to tackle the real estate transaction that you're trying to do. And the biggest thing is definitely pricing differences. So you definitely want to get the best deal when you're shopping, and having conversations with multiple lenders will help you to sift through any sales tactics that one or even multiple of those lenders are trying to pull on you. So maybe, for instance, a lender is artificially decreasing closing costs by maybe not setting up an escrow account, maybe artificially estimating much lower on your homeowner's insurance, that type of thing to show that closing costs are lower. Or maybe they're giving you a better rate because that's one of the things that's important to you, but they're charging you in points, and you haven't looked through your loan estimate correctly with enough vigor to see that you are actually being charged a substantial amount in closing costs in order to get that lower rate that you wanted. So having those different options helps you compare different loans, apples to apples, and it also helps you sift through sales tactics. It helps you to really get the best pricing. And even if the pricing it's close, but maybe one lender is more expensive, are you getting what you pay for? Are you getting that higher level of customer service that you expect for one of the biggest transactions that you're ever going to make in your life? So those are all reasons why you should shop correctly. Now, where do people go wrong with shopping? And there's a lot of different places I see people go wrong. The biggest one, I think, is not understanding how pricing works, and then maybe they talk to one lender and they get maybe a rate for a pre-approval one day, and then maybe 2 weeks later, somebody tells them, oh, you should talk to this other lender. And they do. And the rate is drastically different in one direction or the other. And that could be just because of market swings and not necessarily because of a difference between those two lenders. That, and then maybe you ghost the other lender who could have offered you a better deal. So that is a very big one. Trying to shop without setting the time aside for it. Not having the time set aside is also a big problem. If you are not able to commit to shopping, then you shouldn't, because you need to have that time set aside to get all that paperwork done, have different conversations with lenders. And if you don't have the time to do it, then it may be in your best interest to just go with who you trust based off of a recommendation from somebody that you trust. So maybe your realtor gives you a really good loan officer and you just don't have time to shop. You don't have to, and you're probably not going to get a terrible deal regardless of who you go with. Ghosting lenders, that's a big one. Trying to shop after you get into contract. I think that is the worst out of all of these. Really, I've seen some scenarios. I had one recently where somebody was midway through a real estate transaction, a purchase, and the man actually did not qualify for the loan. And he had already put down his deposit, he had already paid for his appraisal, he had already got his inspection, and he was getting very close to his loan commitment date. And when he got a second opinion from me, I found out that he did not qualify for that loan. And that transaction did not end up closing. So he lost some money on that. So if he were to do that up front, then he would have heard he doesn't qualify from one of these lenders, and he would have to have an honest discussion with the other lenders that he was speaking with to understand why that is the case, why one lender thinks he does qualify and one thinks he doesn't, and then make a decision of how to proceed based off of that. And that is very important. And also a problem with vetting lenders after you get into contract is once you are in contract, like I said before, the clock starts ticking. So having the ability to shop quickly is important. And when you don't have the time to fill out an online application and send documents, and that lender is fast but not quite fast enough to do your pre-approval in an hour, you really could put yourself at a disadvantage switching lenders in the middle of a transaction. So vet your lenders before you get into contract. That is how to properly shop for a loan. If you have any questions on that, leave them below or reach out to me, and I'm happy to help with that.